Boom. What's going on, guys? Energy News Beat, episode number 164, here on this gorgeous Friday, November 20th, 2020. Guys, we finally made it to a hall pass. Holy smokes. I am your humble correspondent, Michael Tanner, joined by the executive producer of the show, the creator of the show, and the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. How you doing today?
It's a beautiful day in the neighborhood. You got a hall pass, and we've had some great conversations this week.
It's been a really busy week. We've actually have an unbelievable some stuff coming your guys' way that I think you'll be really excited about. So stay tuned for all of that. Great show for you lined up, as you can see in the rundown here. Rig counts raised by 3. We'll cover everything there. Pioneer and the executives get a little raise over there. We'll talk about that. A new private oil and gas operator, Forepass Energy, spins up. We'll cover everything. Stu's got stuff in the international news desk. We'll cover the equities markets. But first, guys, just subscribe to our YouTube channel, Oil and Gas 360-Enercom. Subscribe, do whatever, make the algorithms go nuts. Tonight, before you go out on a little date with your significant other, stream our show 4 or 5 times. Nothing puts you in the mood to go out and have a great time with your significant other than watching the Energy News Beat 3, 4, 5, 6 times. It's really best. Get a little glass of wine, a little pregame before you go out. I highly recommend it. On the equities markets today, this is also some table talk you could talk about on your date tonight. You could talk about the equities markets were pretty choppy today. 7-day coronavirus average up to 165,000. On Thursday alone, there was a record of 187,000, or 24% higher than a week ago. To give you an idea what that did for the equities markets, SPY was down 0.25 percentage point. Nasdaq stayed fairly flat, about 0.04 percentage points on the upside, so that's flat. Dow Jones finishes 29,342. That's basically flat as well. Futures markets have just turned south as well. Here standing about 12:45 Mountain Standard Time. That's really what part of the reason, again, we're seeing this downside is coronavirus numbers. California Governor Gavin Newsom issued a limited stay-at-home order for everyone but himself. Just he wanted to make that clear with everybody. And then on the other side, Steve Mnuchin, who's the U.S. Treasury Secretary, went out on Squawk on the Street this morning and said, quote, "We're following the intent of Congress by not passing any more stimulus." He's winding down a handful of Fed lending programs that brought corporate bonds. He's also winding down the Main Street lending program, which was targeted lending towards small and medium-sized businesses. While this move has drawn pushback from the central bank, there are some economists who do, specifically on mine, we can't just keep pumping money into. At some point, we run out of money to continue to pump into it. But he did come out and say they have $750 billion of firepower. Man, that's talk about locked and loaded. I wish I had that type of firepower in my bank account. $750 billion. But as the quote was, we are following the intent of Congress. So you know what that means. Nobody really knows what's going on. When we move over to the equity or to the energy equities markets, we'll cover crude oil first. That's up 42.44. That's 1.5% on the upside, about 50 cents. So back into the curve, 0.6 percentage points, 43.45. As the vaccine continues to, as the vaccine news rolls out, so will oil. I think you're seeing the equities markets react much more to COVID. I think what you're seeing crude oil react much more towards is, one, hopefully OPEC being able to bring their people in line for 2020. But also, if this vaccine is available, whether or not cases go up, you're going to see people start moving around. That has a lot to do with crude oil demand. Natural gas up 2.3 percentage points off the back of some cooler weather that's going to come in specifically tonight and starting early on Monday. Those weather forecasts turned very bullish, $2.65. Back into the curve unchanged, though, $2.83, basically half or 0.05 percentage points on the flat. XOP, which are E&P securities contract, down 0.6 percentage points. Usually we see crude oil up. We'll also see XOP rise. Not in the case today. There's actually inverses of each other. OIH was down 1.5% as well. When we look at some of our biggest movers, start with the downside. Laredo Petroleum down 4 percentage points. Midcon Energy Partners down 8 percentage points. Contango Oil and Gas down 9 percentage points. On the upside, huge numbers. SM Energy up 5 percentage points. Sandstep Midstream up 5 percentage points. Permarock Royalty Trust up 6 percentage points. And our newest lister, back from the dead. You were bankrupt before, and now we're back. Oasis Petroleum. Stu, they were up 19,000% today. Just kidding, guys.
19,000?
19,000%, except that volume's only 446,000, market cap of about $9 billion, which is less than when they went ahead and declared for bankruptcy the first time. So don't let that 55 stock price share you. It's the same rock and it's the same management team. So we know how that's going to turn out. Before we dive into the international news desk, guys, this show is powered by Data Gumbo, an award-winning technology company with customers all around the world who build, manage, and automate their own smart contracts. Data Gumbo smart contracts offer a new approach to commercial relationships, one that reduces friction, streamlines operations, and increases transactional certainty and cost savings. Every transaction is accurate, certain, touchless, automated, and powered via the Gumbo Net. Go get yourself a big bowl of Data Gumbo via www.datagumbo.com. It'll fill you up great. Stu, what do you have at the international news desk?
I'll tell you what, we're having a bunch of fun over here. China's S-Volt is building power. I kid you not, a battery plant in Germany. You can't buy this kind of entertainment. S-Volt says that the plant battery capacity will be 24 gigawatts per year with demand from its European companies. Here's what's kind of funny about this and this nugget. The EU has renewed its focus on creating an independent battery supply chain in Europe by using a Chinese company to build it there. I don't know what part of independent did anybody understand that.
China and independent? Yeah, those two words don't go together.
I don't know. S-Volt is formerly a subsidiary of the Chinese auto producer. Can you guess the name?
Chinese auto producers of China.
It's the Great Wall Automotive Company. Okay. That sounds like something on a fortune cookie. Moving right along. We're off and running here. We're off to Africa. So we were off in China and your EU. Now we're down just kind of a little bit down there to Africa. Here we are. We've got off-grid solar generation could affect how Africa uses coal, natural gas for electricity. It's a good thing for everyone. When you take a look at this article, here we have the incredible graphics team here. You'll notice up here that this is by 2050. This little tiny thing right over here, it says off-grid solar is this big. This big is natural gas in 2050.
Interesting. Okay.
Yeah, I don't think natural gas is going away in Africa. Okay, moving right along. China, we're back at China here, but this one's in the Middle East. China is acquiring Exxon's Mobil remaining in Iraq oil stake. This one's kind of wild. Last year, their Exxon staff had to leave Iraqi fields because of the problems that they were having. The nugget is in here. PetroChina holds 32.7% of the West Corner Field 1 and owns, and it Corp owns about 19.6%. The Chinese going in and buying ExxonMobil in Iraq. All right.
Yeah, I mean, you want to talk about some of this. You want to talk about two just first-rate governments getting together. Ooh.
Oh, it's a group therapy hug. Waiting to happen, man. I'll tell you what, I'm ready for a hall pass. Whenever you can hand it out, I'm ready.
We've got 4 stories to cover quickly. First, rig counts up 3. If you're an Embarrassed subscriber, you got this stuff last night. We're still waiting on our logins. Hey, Embarrassed, thank you very much. 382 on the plus side. Give you guys an idea. The Eagleford saw 10, the Permian saw an increase of 10. There was some decreases around the country. Eagleford actually saw a drop in 3 to 1. But to give you an idea, private E&Ps currently are holding the horizontal rig record. An average about 35% of all horizontal rigs over the past 2 years have been private E&Ps. It's now 44%, which is the highest number it's ever been. I'll give you a couple ideas. I know a company called Crown Quest down in Midland is just drilling and completing like crazy. So, the next story we'll cover, private capital is available to be slung. It's what's interesting. We were on a call today talking about public markets and how just there's been a complete absolute disaster in the way public markets have been allocating money to oil and gas. Private money has not either learned the lesson or even seen what's going on because they are drilling like crazy. And speaking of that, we've got our newest private equity company called Forepass Energy in partnership with Oak Tree. They launch a $900 million commitment with a $600 million initial equity and an option to upsize the commitment by $300 million. The Forepass Energy team is led by former Felix executives Ben Jackson and Andrew Dunleavy, alongside a bunch of operational and subsurface leaders with a pretty extensive experience all across the sector. Quote from Forepass CEO Ben Jackson: having participated in the A&D market over the past 7 years, we understand the opportunity set requires a sizable equity commitment, as well as the flexibility and creativity when structuring transactions. Our partnership with Oak Tree fulfills each of these requirements, which will be a key differentiator for us. We built a strong acquisition and operations team with this opportunity in mind, and we are proud to have Oak Tree partner with us in this new endeavor. Yikes. We'll see where this goes. We'll check back in a couple of years and see where how this 900 million has grown. They're in Denver though. Okay, website. Should have called us. That's where you made a mistake. Could have cleaned this up a little bit. Colors are a little flat. I do love their Rocky. They do have the maroon bells on their header, so I'll give you one good credit. But you give us a call. mtanner@energonomic.com. We'll spruce this bad boy up for you, no problem. The other story we've got, Sheffield. They're having a real big Thanksgiving. Not only did they acquire Parsley for basically nothing almost. It was just all stock deal, very little premium. He's also CEO Scott Sheffield also got his annual base salary increased by 20%, back to the original pre-COVID levels. As remember, guys, in May, they expect to save $100 million annually through job cuts that they announced in May. Why not give yourself a little raise after you lay some people up? Seems to be what everybody is doing. Along the M&A market, Oasis, as I mentioned, up 19,000% today. It's okay. That's just from where they were trading at pennies before they went bankrupt. Give you guys an idea. They're back now trading on the open market. Have repetitioned their debt by $1.8 billion and resolved a bunch of issues. Here to give you guys an idea: capital structure, $575 million in a reserve-based lending facility, $340 million drawn in at merchants. Their first borrowing-based redetermination, April 1st, 2021. It matures May 2024, and their LIBOR is 300 to 400 BPS and the 100 bips as a floor. So, it's a new board. Chairman of the board, Douglas E. Brooks. Here's his quote: on behalf of the new board of directors, I'd like to acknowledge and appreciation of our employees, blah, blah, blah. It's now uniquely positioned in a best class balance sheet, blah, blah, yeah, blah, blah, blah. Rigorous capital discipline. Yeah, sure. That translates to long-term value creation. We'll see there. This is where it gets interesting, though. And this is where, guys, we've been preaching ESG on the show so much. The reason why we're doing it is the fourth sentence in the emergence from Chapter 11 bankruptcy is: the new direction for Oasis will be executed with a strong ESG culture. You may not believe in it, but trust me, the equities markets are believing in it, and we're slaves to money at this show. So, if you're not taking it seriously, I don't know what else to tell you. Stu, what else you got for the show today?
I'll tell you what, I'm ready for a hall pass, oh mighty one.
Holy smokes, I'm about to pass out here. With that, guys, we're going to go and get out of here, let you get back to work, finish up your day, and check out early. If your boss asks you why you left early, you can just say Michael and Stu let you out. For Stuart Turley, I'm Michael Tanner. We will see you guys on Monday morning for our Energy Rant podcast, and in the afternoon for our Energy News Beat. We'll see you then.